right, guys, let's go ahead and get started. Hi, everyone. Welcome to our final presentation of our Financial Literacy Month. Today, we're going to be doing our auto buying for teens. So this is going to give you guys an inside look about what your future is going to hold when you do finally decide to buy your very first car. There's a lot that goes into it. So hopefully I give you guys some good knowledge. And when that time comes, you guys will be prepared. Let's get started. So I'm sure you guys, if you've been attending our last couple seminars, you know me. But for those of you that this is your first one, welcome. My name is Melissa, and I've been with Foothill for about 7 years now. So I've been here quite a while. I've seen it all. It's been very fun. It's a great place to work. I'm a business development consultant. So I help promote the credit union. I get the fun job. I get to go out and do fun events. And a part of it is teaching our youth about banking. So it's really cool. Fun fact about me, I graduated from Cal State Fullerton. I have my bachelor's in business. I got my emphasis in entertainment and tourism. Also, I am a proud dog mama. So that's my little baby Pepe. So hopefully you guys remember him. You guys are a fan of him by now, but he's my little feisty chihuahua. So just getting into it today, what we're going to cover, we're going to go over a lot, guys. So I hope you're ready. We're going to talk about knowing your budget for the auto buying process. There are a lot of expenses that go into it, a lot of costs that you might not be too familiar with yet. We're going to talk about knowing your options, because a huge part of buying your very first car is going to be knowing specifically what's out there, knowing how to do research for that. Because it's really important, you guys, that you do your research. Do not go with the first thing you see. We're also going to talk about the loan process. So I'm going to give you guys an inside scoop on what we as a lender look at when we are approving your loan. So hopefully by that point, you guys will know exactly what to present and what you need to keep on top of. So the first thing, knowing your budget. So I know our last presentation, we talked about budgeting as far as savings and knowing different types of expenses. But when you guys are starting the auto buying process, you really need to look at how much you can afford and be realistic. You need to set a realistic goal for yourself. With autos, we see it all the time where somebody will go with the fanciest, most souped up car. And sometimes you can't afford that. Sometimes that isn't the best option for you because like I said, there are a lot of costs that go into it. You also need to look at your regular costs, your regular expenses, like your monthly bills, your groceries, eating out and shopping, you know, hanging out with your friends. You really need to look at the cost of those items, because if you do maybe want to spend a little bit more on your car, you probably are going to have to cut some of those items out. You'll choose what expenses you can cut. Also, you want to look at your monthly payment. You want to, as we talked about with your Credit 101, there are monthly payments associated when you guys are doing credit cards, right? The same is going to go for auto loans. You will always have a monthly payment. And something really cool to go by is the 10% rule. You want to follow the 10% rule, which is basically your payment should not be more than 10% of your take-home pay. So really look at that when you guys are choosing what car to buy. You need to look at your monthly payment. And that payment's going to stay the same. Don't forget that. For the entire life of the loan, it will be the same every single month. So that'll be good, because then when you're trying to decide what budget fits you best, you know it's not going to change. You know it's going to stay the same. Also, look at your down payment. This is something that is optional. When you are buying your car, you have the option of putting a down payment. What that is that's just a percentage of the loan. And like I said, it's totally up to you. A lot of people will save up for a down payment because what that does is it lowers your total loan amount, which will obviously lower your monthly payment as well. So the less you have to borrow, the less your monthly payment will be. Usually a lot of people like to shoot for a 20% down payment. But like I said, it's completely optional. I highly recommend it for you guys. But if you find that you weren't able to do that, you can still try to apply for the auto loan. So now going into the true cost of a car. So like I mentioned earlier, there are additional costs that maybe right now you guys aren't too familiar with, and you didn't know that that's going to be a part of, owning a car or having an auto loan. The number one is probably auto insurance. So it is required legally to operate your vehicle. So this is a rule that everybody has to abide by. Everybody has to have auto insurance. And there's different types of insurance, different types of insurance vendors. So this is something you will also have to do your research on to see which insurance fits you best. A lot of times too, it depends on the car. The newer the car, the higher the auto insurance. So just make sure you guys pay attention to that as well. When you are trying to get the nicest, newest car, most likely you're going to have a pretty high auto insurance. For auto insurance though, you can choose. A lot of auto insurance vendors allow you to do either monthly payments. You can do monthly, you could do annually. Some people even allow you to do it every 6 months. It really just depends, but just to give you guys an example, I have a 2021 Toyota RAV, so it's fairly new, and my auto insurance per month is about $150. So obviously that's, I don't have the best driving history, so that is covering everything. So it's probably the highest, most premium insurance. But you also have to think about that, if you're not the best driver out there, maybe you might have to be covered for more things. So it really just depends, but you definitely have to do your research on that. Next is registration. So when you buy a car, you do have to also pay registration. Usually registration is annually, so it's once a year. But the cool thing about when you buy a new car, when you first get your car and you get your loan with the credit union, you could calculate your registration fee into your auto loan for the first one for the year. And then after that, it will be your responsibility to do your registration. And I just paid my registration. So mine was a little bit over $400. So every year I'm going to have to pay that. So that's something else that you guys have to look forward to when you have a car. Also too, you want to look at gas when you do purchase your car or you do choose that car. Look at how much gas you're going to be using, especially right now. I know that's a huge topic. People that have trucks or big SUVs, it's not the best time for them. So always look at that as well when you guys are choosing what car you want. How much is gas going to actually cost you? Also, you're going to look at maintenance and repairs, right? So these can be unpredictable or predictable costs. So these are not costs that are included with your insurance. These are additional things like your oil change, right? That's something that you have to do every couple of months. And depending on what place you go, it can be pretty costly. Also to think if you get a flat tire, how much are tires for your specific car going to cost? The different types of repairs that might be need to be made. Different cars, obviously, sometimes are more expensive to fix. So you want to look at that when you guys are choosing your car. So there's a lot that goes into it, but as long as you guys do your research beforehand, ask questions. That's a really good takeaway from today is don't be afraid to ask questions when you are looking into your first auto purchase. We talked about this a little bit in the Credit 101, but it's an important reminder for you guys that, when you are thinking about getting your first auto loan, they're going to look at your credit, okay? Because it's not just about if you can afford the car, but it's also about, if you have the worthy credit to get that loan. Because a lot of times for your first auto purchase, you can't pay it all cash. You're going to have to get a loan with the lender and finance it. So make sure you guys are still paying attention to your credit score, staying on top of that. For those of you that maybe didn't join our Credit 101, just a little refresh. Your credit score is a 3-digit number that shows how trustworthy you are. It's a score that lenders use to see how trustworthy you are. And also it's the score that helps determine what type of interest rate you would get approved for. So if we're looking at this, the scoring wheel, obviously you want to always be very good or excellent. So having a credit score that's over 790 or 740, you know, that's very good. So the higher your credit score, the lower your interest rate's going to be, which means you'll pay less for borrowing those funds. Versus if you had a low credit score, so if you're down by fair or poor, you're most likely going to get a higher interest rate, therefore paying more for borrowing those funds. So really pay attention to your credit score. Like I mentioned last time, utilize annualcreditreport.com just to take a look at your credit report. And like I mentioned before, if for an additional fee, you can get your FICO score. Or if you're a member with us and you have your Protection Plus checking, don't forget you are able to see your FICO score with that. So that would be something fun for you to do as well. And just also another refresh for credit, looking at the components of the credit score. So your credit score is basically your grade in life. And so this is a good way to show how they calculate that grade. So don't forget payment history. The number one takeaway with credit is to always do your payments on time. I know we had a lot of good questions about that. You know, you don't have to worry too much about it. You know, if you miss one payment, you know, that's okay, mistakes happen, but if it's a habit, that's really going to hurt you. So number one takeaway, do your payments on time. That's 35% of your score. 30% amounts owed. So how much debt do you have versus how much available credit? A good rule of thumb we mentioned last time was try to use only 30% of available credit, okay? Make sure you keep it low. You do not want to rack up debt. That's 30%. Then we have 15% is length of credit history. So how long have you had credit history for? Obviously, the longer you've had it, the better history you have. So it could show that you're very trustworthy as long as you've been responsible. And then 10% types of credit use. So they want to see if you have a healthy mix. Do you have all credit cards, or do you have a credit card, a personal loan, auto loan? Because if you have different types of credit, it does show that you are responsible at managing different types of credit. And just because you're good at a credit card, at managing a credit card, does not mean you will be good at managing an auto loan, because they're two very different types of loans. I mean, you could be very good at managing both, but you shouldn't expect that. You'll still have to teach yourself how to get on a good rhythm and how to be responsible with that different type of loan. Lastly, new credit, which is 10%. This is how often you have applied for credit. And if you guys remember from our Credit 101, a big takeaway from this one is do not constantly apply for new credit, especially if you get denied. If you're getting denied, take a step back, you know, ask them why. They usually can tell you why you got denied, and then figure out a way to fix that, to rectify that. So number one takeaway, do your payments on time when it comes to credit, but these are the different factors that they're going to look at for your credit score. So we have our first knowledge check question to see if you guys are paying attention. So you guys can go ahead and throw this in the chat box if you know the answer. If you don't have chat box available to you, maybe talk amongst yourself. So follow the blank rule when setting your monthly payment budget. I see a couple of chats coming through. Okay, good. So we have some people that think they know it. So the answer is 10%. So make sure you guys follow the 10% rule, which is that your payment should not be more than 10% of your take-home pay. Good job, guys. So next, so when you guys are shopping for your car, before you purchase that car, you really need to take some steps and do your research to see what fits you best, what vehicle is right for you. Also look at your needs versus your wants. Like I mentioned, maybe you want the newest, most souped up car, but maybe you can't afford it. So really look into that. You know, you're gonna wanna look into how much space do you need? You know, is it just you? Can you get a two-door car? Or is it for you and your family? You know, are there children that are going to be in this car pretty often? You know, do you have kids? Do you want to have kids very soon one day? So you need to look into a car that's going to have enough space for you. I know my first car was a two-door car, which I could not stand. So I would never recommend a two-door car. It's very inconvenient when you have people in and out of your car pretty often because they have to move your seat and some people don't move it back. Some people can't fit. So it can be a hassle. So I recommend to not do a two-door car if you plan on having people in and out of your car pretty often. That's why I upgraded to my four-door, my SUV, because I love it and I need the space. You want to look at what size is good for you. You know, I mentioned I have an SUV. It's because I need all of that space. I have a lot of, for work, I actually have to transport a lot of materials. So I need a pretty big trunk. But if I didn't have to do that, I probably would have a more smaller, like four-door. I probably would have gone for the Toyota Corolla. But it's really just up to you and what you're most comfortable with. You know, do you want the SUV or do you want a smaller like sedan? Just look at that. Also too, we mentioned gas earlier. You wanna, when you're choosing your car, you wanna look, do you want a hybrid? Are you gonna be driving a lot for work? Are you gonna be commuting pretty far? Maybe a hybrid would be better for you rather than gas. So it really just depends. Lastly, you also want to look at reviews. I know that might sound a little bit weird, but with cars, you can actually Google different reviews for the cars. Or even too, you can ask around, you know, if you have a friend or know somebody that has the car you want, don't be afraid to ask them, you know, what they think about it, you know, how they like it. Also too, a fun fact is you can test drive vehicles at the dealership. So before I got my RAV, I did go to a dealership to test drive it. I knew I wasn't going to buy it right then and that day. But I just wanted to test drive it because maybe you don't know, you think you like it, but you don't know how it drives. So once you get in it, maybe you'll drive it and you realize this is too high. I don't like it. This is too big. I feel too small in it. So you might change your mind. So just be sure to take advantage of that and go do some test driving before you actually purchase it. And then also make sure you look at additional costs for upgrades, because I know if you do shop at a dealership, sometimes they can add additional upgrades for you and it'll add to the cost of the car. But don't assume that automatically all cars are going to come with that. You know, a lot of people think that tinted windows, you could do that automatically at the dealer, but no, that's an additional cost that you would pay for out of pocket. Not all new cars come with backup cameras. Sometimes that's an additional cost that you would have to pay for. So it just depends. But the good thing is you can customize it, you know, if you know exactly what you want and do your research. That's why it's so important. So when you guys are ready to pick your vehicle for you, there are several different options that are available to you when you want to buy a car. You could either buy a new car, you could buy a used car, or you can even lease a car. So I'm going to go over each because I think it's really important for you guys to know what they technically mean or what you would be getting out of each and every one of them. If you get a new car, know that you can get a new car from a dealership, or you could even finance it with your institution or your credit union. So just because you find it at the dealership doesn't mean you can't get the loan with Foothill. Make sure you guys realize that you can still get the loan with Foothill. You don't have to do it exclusively with the dealer. But some advantages of getting a new car, like I mentioned earlier, it's customizable. You can pick specifically what you want to add for this new vehicle. There's a lot of options for you guys, so you can, you know, tailor it to your liking. You'll obviously get the latest safety and technology, like I mentioned, like a backup camera. That is my savior, if I'm being honest. Nowadays, they even have blind spot monitors, so you don't even have to look over your shoulder anymore. You have on your mirror, you have a little monitor that tells you if there's a car in your blind spot. So it can be really cool, but pretty pricey, so just be sure to look out for that. Also too, with new, it's going to be in optimal condition. So it is brand new. You know its history. You know nobody before you has ever had this car, has ever driven this car. So you have that confidence, you know, that nothing bad is going to happen once you take it off that lot as far as mechanical wise. Also too though, don't forget, it will be a higher monthly payment. Newer cars obviously are at a higher price, meaning you most likely will have a higher monthly payment. There are a lot of people out there that don't like new cars specifically because the value depreciates. So right when you drive that car off the lot, you know, its value is going to go down. So it's not going to be worth the exact same amount that you just bought it for. That's a lot of people are hesitant to get new cars because of that. But also really cool features that new cars could come with warranties. So when I got my Toyota RAV, I have I have 2 full years of free oil changes. So look at if there are any warranties that you get. Those will come in handy over time because oil changes can be pretty costly. So that was a nice little perk that I got when I got my car, which it was with the dealership. So I got the warranty with the dealership, but my loan is with Foothill. I financed it through Foothill. So I got the best of both worlds. Then we have a used vehicle. So used vehicles are usually less expensive because they are pre-owned and they're not brand new. But it's important to, when you are looking for a used vehicle, look at if you can see their history. A lot of places have a certified pre-owned, so you can't know exactly what its history, but they try to at least get you the best deal and at least give you as much history and as much correct history that, you know, it hasn't been in an accident, it hasn't had any mechanical issues. So try to look for that when you are researching used. Try to find a certified pre-owned and get it from a trusted source, because a lot of times people maybe will buy them off of the street or from a family friend, but you don't know its exact history. And if anything goes wrong after you pay that person, it's too late. You know, you already gave them the cash, the deal's been done. So that's why sometimes it is a little bit better to go through actual used dealerships or vendors that have certified pre-owned vehicles. With used vehicles, you avoid depreciation. So it's already been driven off the lot. So its value is not the same already, but you don't have to worry about that because it's a used vehicle. You're probably going to look at more wear and tear because like I said, it's pre-owned. So it will have some miles on it. Maybe the condition, you know, maybe the trunk or the bumper, the doors, you might have minor scrapes or scratches, but if you go to a really good place to purchase the used vehicle, you won't have to worry about that. And like I said, you'll have a great history of that car. So you don't have to worry about that too much, but just be aware of that. There will be a little bit more wear and tear. And like I mentioned earlier, you just don't know the history when it goes with you. So dealerships, if you're getting a used vehicle from a dealership, that's usually better than getting it from a friend or off of the street. It's a little bit safer. Also, there's leasing. So leasing is an easy way to explain leasing is kind of like you're renting the car. So you have an agreement with the dealership. You're not technically buying the car. You're renting it for a specific term. So you're not going to own this car once you make your payments for the lease. It's just for renting it. It is not to actually own the car. Typically, leases can go from 2 to 4 years, so they're pretty short terms. But also with leasing, since the term is so short, your payments are going to be pretty low as well. So a lot of young adults will do leasing because it's a little bit more affordable because the payments are a lot lower. But you have to remember too, with leasing, there are some restrictions. So you might have mileage limits. So they might say for the 2-year lease, you can't drive more than 10,000 miles on this car. So that might be easy for some people, depending on how you plan to use it, but it might be hard for other people that actually are going to be driving around. So you're going to have to constantly pay attention to how many miles you're putting on this car, because typically if you go over that, there can be an additional cost. Because what happens at the end of your lease, you can either choose to swap it out for another car and then you start renting another car, or you can choose to buy it out. You do, excuse me, you do have that option to buy the car out, which a lot of people will do if they liked the car, you know, if they fell in love with it and they know they want to keep it. Or sometimes if you do go over the restrictions, it's cheaper for you to just go ahead and buy out the car and just keep it. But just remember that your previous payments going towards that car, they're not going towards the cost of the car. That's just for you renting it. So once you decide to buy out their car, they're going to look at the value of the car. So how much it's worth, and then that will be your loan for the lease buyout. So you're going to have to go ahead and pay that. So it really just depends, you know, on the type of person you are. Some people like leasing because they like the fact that they can switch out the car every so often. So you technically will get a new car, you know, every couple of years. And if you're the type of person that, you know, you like options, that might be best for you. But if you also too, if you're the type of person that needs a lower payment and that's something you're worried about, then a lease might be a good option for you. But like I said, it just depends on you and the type of person you are. But make sure that when you are doing a lease, you pay really close attention to the contract, because you want to look at all of those restrictions, because they're not going to come right out and say it, make it super obvious. It's going to be in the contract in really tiny writing. So I'm not saying, you know, one is better than the other. I'm just saying for the lease, you really want to make sure you pay attention to your contract. So now going into the loan process. So what does it look like from a lender side? When we are lending you the funds for your auto loan, what are the different things that we look at? So that's what I'm going to go over right now. So we're going to look at identifying information, right? So obviously we need to make sure you are who you say you are. So when we do the loan, we're going to ask for your driver's license, something that shows proof of identification, could be a passport, obviously your proof of address, and membership. So if you're doing a loan with Foothill, you do have to be a member if you choose to move forward with the loan. But if you're not a member with us, you know, if you have another institution, you'll have to be a member with them. So really look at who's going to give you the best options, but just make sure that you know, like if you're going to apply for that loan at a specific institution, you typically have to be a member or a customer of them. And with loans too, it can be helpful to go with your primary institution because we have the most history with you. But if you don't, it's still okay to go to a new institution. So if you open your account with Foothill and you're brand new and you think you can't apply for the auto loan right away, you can. You could do new membership and your auto loan at the very same time. But it just usually is helpful if you have had some history. We're also going to look at your employment history. So we're going to look at how long you have worked for your current employer. And what that is that's going to give us an idea of your ability to repay us. You know, it's going to be one of those factors of how trustworthy are you. Because if you have been employed for, you know, 5 years, it's consistent. We know that you're most likely going to have a consistent paycheck. Therefore, you will have the means to pay us back for the loan. At times, we can choose to ask for employer contact information. Sometimes we might need to verify employment. So make sure you guys, not that you would ever lie, but you know, you always want to be truthful when you're giving that information out. So also what we are going to ask for is proof of income. So this is just it's kind of in the name, just shows us that you are making income, you are receiving a paycheck. So what we're going to ask for is your pay stub. So if you guys are currently working, I'm sure you're familiar with that. That is your pay stub has a complete breakdown of how much you make for either the week, if they pay you weekly, how much you make monthly, if they pay you monthly. It also shows, you know, how many hours you've worked. It'll show your tax deductions. So it's pretty, it has a lot of details in it that we would look at, but it's going to be your pay stub. That's usually how you show proof of income. And most likely they ask for your 2 most recent pay stubs. And heavy emphasis on recent, because we need to make sure that's another way to verify you're still employed there. Because once again, not that you guys would lie, but if we take a pay stub from 6 months ago, you know, you might have left that job. Maybe you work somewhere different that doesn't pay as much. So it's going to be your 2 most recent pay stubs that they ask for to show proof of income. And it's usually your income that's going to help determine how much you get approved for. Because obviously, depending on how much money, how much income you make, we're not going to give you more than you can chew. So we're really going to look at the amount of income that you're earning. Also, we're going to do a credit check. So like we said earlier, your credit score, that's something that we're going to look at. From your credit check, usually what we need is your social security number. So you're either going to have your social security card with you, or at least know that off the top of your head. And I guarantee you guys, maybe right now you don't know what your social security number is, but as you become an adult, as you get older, that will be something that you know just as easy as your birthday. You're going to memorize it. With your credit check, remember that's going to help determine your interest rate that you get approved for. And obviously, like we've mentioned in the Credit 101, the higher your score, the lower your interest rate. And that's their best bet right there. So you really want to try to work towards that 800 credit score, because then that's just less money that you're going to have to owe. So yeah, so that'll be really good. Also, your credit is going to be another factor on how much you get approved for. So also know that. Next, we're gonna look for proof of insurance. So once you have started that loan process, like I said earlier, legally you do have to have insurance for every car. So we're gonna need to see proof of that. Also too, because when you do have a auto loan with Foothill, remember that the auto technically is in Foothill's name. So we are technically the owners of that car. So we need to protect it, right? So we need to make sure that you have insurance on there. So if anything were to happen, you are covered. Typically, we give you about 10 days to show a proof of insurance. So if it's your very first car that you're buying, don't be worried that you don't have insurance just yet. We know it's your brand new car, your very first time. So you have about 10 days to figure out which insurance provider you're going to go with. And then you would just show us the proof of that, which is typically your policy number, because when you do get insurance, you're going to have a policy number. And it's just going to let us know how much coverage you have on the car. But just be careful though, because there are fees associated if you do not show proof of insurance, and they can be pretty high. If you don't show the lender your proof of insurance, they can be over $1,000. I've seen fees as high as that. So it's much better for you to just handle it, figure out what insurance provider you want to use, and then give that to the credit union. So be responsible, guys. Also review the agreement. So when you are finalizing your loan, we are going to send you a contract. And it's your responsibility to look over that contract or that agreement and ask questions before you sign it. Don't be afraid. I know with young adults, I feel like you guys are obviously new and feel like you might ask dumb questions, but there are no dumb questions, I promise. A question you ask, most likely somebody before you had that question. So don't be afraid to speak up. Make sure you guys are asking questions. Especially if it involves your payment, because that's something that's going to be consistent each month. Also know that your due date for your payment, you can choose what due date you like. So sometimes the lender will automatically choose a date for you, but don't be afraid to ask questions and say, hey, I typically get paid on the 15th of every month. Can I have the due date to be after that rather than before it? And most likely they'll be fine to go ahead and change that. So it's little things like that that you guys have to pay attention to. Also, your first payment date, that's something that you can set as well. So like I said, just make sure that you're being specific and ask questions, and just do not be afraid. Also, another knowledge check question. What do lenders ask for to show proof of income? We just talked about this, so we'll see if you guys are paying attention. Hint is they typically ask for your 2 most recent ones. I see some answers coming through the chat, so I know you guys are still awake. That's good. Hopefully you guys are talking amongst yourselves, see who knows the answer. So what do lenders ask for to show proof of income? They ask for your pay stub. So good job if you got that, because that is kind of hard. So another important part of shopping around or doing your research is really comparing offers and understanding your negotiating power that you guys have. Because you have to remember, you are allowed to shop around different lenders to see what each of them approve you for. If you guys remember from my Credit 101, that's the time when the credit bureaus allow you to apply for new credit. And it won't ding you. It won't hurt your credit score. As long as you do it within a 30-day period, make sure you try and stay within that 30-day period. And they're going to know it's for auto loans because it's going to say it when they do run your credit. So shop around. Remember, the number one thing you're going to want to pay attention to is your interest rate. Interest rates are going to vary with lenders. Obviously, credit unions typically have the lower interest rate. We're very what's the word I'm looking, competitive when it comes to that. And remember, that's how much you're getting charged for borrowing. So the lower, the better. You're going to look at the loan terms because that is something that you can choose. Look at what loan term they're going to offer you with that interest rate. Because obviously the longer the term you have, the longer you're going to be paying it. So the overall cost at the end is going to be higher. Look at your monthly payments, guys. Let's look at what payments they are offering you. Because like I said, you have to take into account other expenses you're going to have for the month. And you want to pay attention to that it doesn't exceed that 10% rule we said, 10% of your income. Look at application approval. So when you do get approved, look at how long that approval is for. Because there's a lot of different lenders have different time lengths for how long your application is good for. So with Foothill, usually our applications are good for 45 days. If you go over the 45 days and you still haven't decided to do the loan with us, you most likely will have to do another application because your credit score could have changed by then. So you'll have to do another application and your credit will have to be pulled again. So pay attention to how long that application is good for, how long that approval is good for. Something else you're gonna look at is GAP insurance. This GAP stands for Guaranteed Asset Protection. So GAP insurance is just an additional insurance you can apply to your auto loan. And it is optional. You technically do not have to get GAP insurance, but it can come in handy. So the way that it works is, let's say you have car insurance, right? You have auto insurance and your car gets stolen. What that insurance provider is gonna do is they are gonna estimate how much your car is worth. Depending on that estimation, they're gonna go ahead and pay you out for that amount. So there can be cases where they're giving you less than what you owe on your car. So now you have a gap, right? Because let's say your car, you still owe $16,000, but the insurance says, well, it's only worth 14. That's all we're gonna give you. So you still have those $2,000 that you have to pay back. If you have GAP insurance, they basically cover the gap for you. Because it's important for you guys to know, just because you have the car, you're in possession of it, it still belongs to the lender. It still belongs to Foothill Credit Union. We have the pink slip. We are the lien holder on it. So if anything happens to the car before you are able to pay it off, you still have to pay those funds. So even if your car gets stolen, a lot of people think, oh, well, my car got stolen. I don't have it anymore. I don't have to keep paying Foothill. That's not true. Yes, you do. You still have to continue to pay your loan because the agreement was for you to pay that amount to pay off the car. So GAP insurance can come in handy. Look at how much the cost is for that. It depends from each lender that you use. Usually for Foothill, the cool thing about it is it can be rolled into your monthly payment. So instead of you having to worry about it paying it separately, they'll just add it to your monthly payment. And it is a pretty reasonable price. The average is about $7 a month. So I think it's worthy. I did get GAP insurance. Like I told you guys earlier, I don't have the best driving history, so I did get GAP insurance. But like I said, this is something that's optional for you. Ooh, sorry. Okay. So just wanted to take this time also to highlight the credit union and how we are different than your typical lender. So if you are a member with us already, that's awesome. I highly recommend you guys turning to us when you are ready for your very first auto loan. We do new and used loans. Remember, with lease, that's you renting it from the dealership, so you can't get a loan with us for leasing a car. We don't do leases. It's basically new and used auto loans. We have different terms you can take advantage of, anywhere from 36 to 84 months. You are able to choose that. You do have a choice. Also, we rate match. So let's say you get approved at the dealership for a lower amount. You could bring that to Foothill and say, hey, the dealership gave me a lower amount and we will match that. So that way you can have it with us, because a lot of people like having their loan with where their checking account is at, because it's a little bit more convenient. Also, something that you can do with the credit union is before going shopping for your auto loan, before checking out dealerships, you can get pre-approved. And you want to be really careful with this, because there are two terms that a lot of lenders use and a lot of marketers use. There's pre-qualified and pre-approved. And they're not the same thing. They do mean different things. So when you're pre-qualified, that usually is a less rigorous look into your credit and your debt and income. So a pre-qualification offer could be based on a general credit score range. So it's not like your exact credit score. So it's really not set in stone. It's more of a general pre-qualification. So it's like a general offer. Versus pre-approved does require more detailed information about your finances. So this will be a more concrete and a more accurate offer for you, because there's a lot more criteria that goes into getting pre-approved. So just keep in mind that you can get either of these offers when you are shopping for your auto loan, but just because you get a pre-approval or a pre-qualification doesn't mean that you are set, you've already, you got the loan, you're good to go. But if you are pre-qualified or pre-approved, that just gives you a little bit more confidence that you're good for the loan, that you're most likely going to get approved. But you really, if you're going for either one of the two, the one you want to pay more attention to is being pre-approved. Because like I said, that's the more concrete one where it's an actual offer and has more details entangled in it. Also, you guys should know that with Foothill Credit Union, we do have a free car buying service. It's called Autoland. I've used them and it's a very useful tool. The way that it works is, you know, when let's say you're ready to start shopping for your car, instead of jumping from dealership to dealership, looking at all of the cars, looking at the different costs, the different prices, even instead of looking online at different websites, you can go to Autoland and they actually do all of that for you. They search for the car for you. They have different dealerships that they have partnerships with, and they typically can get you a more, a better price when you're looking at the car. So they have a better relationship to where they can negotiate it on your behalf. So you're typically going to save some money on your overall cost of your car if you go with Autoland. Another cool thing about Autoland too is that you get a discount on your interest rate if you use them. You get a 0.25% discount. So let's say if you were approved for a 3.50%, if you use Autoland, you'll get that 0.25% discount. So you'll automatically go down to a 3.25%. So you'll save your money. It doesn't sound like a lot, guys, but I have examples. It does matter. The lower interest rate, the better. So Autoland is a really cool car buying service, and it's free for our members. There's no fee for it. It's really cool. You have a contact person, you let them know the make, the model, what kind of car you want, and they go look for it for you. If you don't know what kind of car you want, you can talk it through with them. They can come up with some options for you. So it's really fun, and it's less stressful than if you go to the dealership and do everything yourself. So now let's look at some examples. So I'm going to show you guys how your interest, your term, your monthly payment, how all of that can affect your loan. And how it's going to be different costs for each item. So for this slide, we're going to look at your term, right? So if you have a lower term versus a higher term, Right now, the average term is about 60 months, so 5 years. That's usually the average term for an auto loan. So we have two scenarios. We have Melissa and Stacy. So Melissa has a 60-month term versus Stacy, who has a 72-month term. So Stacy has a longer term. Their interest rates are the same. They both got approved for a 3.5 interest. So most likely it was just preference. Maybe Stacy just decided, hey, I want to do a longer term because I know it's going to be a lower monthly payment, which is true. If you look at the monthly payment, Melissa's going to pay $500 versus Stacy, she's going to pay $424 a month. So she has a lower payment. Maybe that's more manageable for her. That was her preference. Down payment, they both put a $2,500 down payment each. So right there, they're the same. But let's look at total overall cost and how Stacy having a longer term affected her. So Melissa's total overall cost was $32,516 versus Stacy, it's $33,028. So Stacy does end up paying a higher total cost for the car. So just make sure you guys take that into account. What's really cool is on Foothill's website, we do have a payment calculator. So if you're ever curious, you can go on our website and play around with different payments, different terms, different down payments to see what each item will come out to. So it's really fun if you ever want to kind of play around with that. Next, let's look at the interest rate, how your interest rate will affect your loan. So we have Melissa and Stacy. Their term is the same. They both have a 60-month term. However, their monthly payment, their interest rate is different. So this is going to show how a lower interest rate is going to save you so much more in the long run. So Melissa has great credit, so she got approved for a 3.5% interest rate versus Stacy, who had not the best, so she got approved for a 6.5%. So initially looking at it, you think, oh, 3 versus 6, that doesn't seem like a huge gap, but it actually is in the long run. So Melissa's monthly payment came out to $500 versus Stacy's, her monthly payment will be $538. So once again, not too high, but she's going to be paying a little bit more for her monthly payment. They both put down the same down payment. But let's look at their total cost once again. So overall total cost, Melissa paid $32,516, right? And this is from her 3.5% interest rate. Versus Stacy, Stacy's total cost came out to $34,784. So Stacy's paying a lot more in the long run for this car, and it's all because of her high interest rate. So once again, guys, this is just why it's just so important for you to pay attention to your credit and be responsible right from the get-go, okay? You guys are at that perfect age, perfect time to start being responsible. Next, we're gonna look at your down payment, how that's gonna affect your auto loan. So we have Melissa and Stacy. They both have a 60-month term. They both were approved for the same interest, 3.5%. But let's skip to their down payment. Melissa put $2,500 down versus Stacy, she did not put anything down. Because like I mentioned earlier, guys, it's optional. It's basically just gonna bring your total loan amount down, which is gonna then save you some money in the long run. So we're looking at their total overall cost, right? Or their monthly payment, actually. Their monthly payment, Melissa, we said 500, Stacy 546. So still a little bit higher, Stacy's a little bit higher, but not too bad. But the total cost, Melissa's total cost was 32,516 versus Stacy 32,745. So once again, guys, not a huge gap, but still Stacy is paying more overall. But that's why your down payment, it is optional. And it can be whatever amount. So if you are able to save up for it, it will help you in the long run. If not, don't worry, it's completely optional. So our last knowledge check question. I feel like this is a hard one, but hope maybe you guys might not think so. What does GAP stand for? So let's see if anybody remembered that. I think that's a hard one. I mentioned it in the presentation. What does GAP stand for? So you can either put it in the chat box, talk amongst yourself. I know this was the harder one. So GAP stands for Guaranteed Asset Protection. All right, and so pretty much wrapping everything up, guys, it's really important, that you guys realize this is a financial commitment that you guys are making. When you get your auto loan with the lender, hopefully with Foothill, it's a commitment, and you need to make sure to be responsible, when you guys are going through that part of your life. Signing the agreement, some quick takeaways, like I mentioned earlier, make sure that you go over the agreement, make sure, not everybody likes to read it, but, try your best to read it and ask questions before you sign. You try to negotiate something afterwards, it's too late. You already signed, they're good to go. Make sure that you're agreed on everything on that, okay? And I think it's important for you guys to know that, let's say you make it all the way up to the agreement. You thought everything was good. You get to the agreement. It's time for you to sign. And for some reason, you get a better offer. For some reason, something happens and you can't go through with it. Remember, you can always back out at any time as long as you did not sign. So don't feel afraid to do that, especially if you find a better offer somewhere else. If you didn't sign that document, you can go ahead and change your mind and move on to do the loan with somebody else. Make your payments on time, guys. I tell you, for credit, my number one takeaway is always do your payments on time. Try to be as responsible as you can. Typically in your agreement, it's going to have instructions on how to do your payments. So make sure you pay attention to that, because with payments, you can either have them done automatically. They can be taken automatically out from your checking account, or you can choose to pay it yourself. It really just depends, but make sure you do it on time. The best way is doing automatic payments. I highly recommend that. And if you can't, for some reason, make a payment, one of the months that you have your auto loan, call your lender right away. You're not going to be able to make it. It's better that you call your lender and try to work out a solution with them, because most likely they're going to want to come up with some sort of agreement, because they'd rather have you give something rather than nothing. So don't be afraid to also ask about that as well. Making your final payment. So when that happens, when you are completely done with your auto loan and you get to your final payment, what happens is you now will be the lien holder. So you will get the title for your car. So right after you make your final payment, the credit union or your lender is going to start the paperwork on getting you your title. It typically comes in the mail. So be on the lookout for that, and make sure you're going to want to put this in a safe place, because that's your proof that you own the vehicle. Because remember, you do not own that vehicle until you pay off the loan. Before that, it is technically still the property of the lender. But I know that's a really fun experience when you finally pay off your loan, especially if you paid it off for 5 years and you get your pink slip in the mail. But keep it safe, guys, because like I said, that's your proof you own the vehicle. So if you do choose to sell it in the future, that is something that you're going to have to show to prove that you can sell it. But yeah, so key takeaways, guys, make sure you're asking those questions, okay? So that pretty much wraps up our presentation. So thank you guys for joining us. Don't forget, if you're not a member with us yet, you do have the option. We are celebrating Youth Month. So any new youth account or any new youth account in the month of April, you will be entered into a raffle for 4 Legoland tickets. If you are a member with us already and have an account, you could open a youth certificate, because that also qualifies for the raffle. So you'll be entered for those 4 Legoland tickets. But once again, guys, thank you so much for just tuning into our financial literacy presentations. I hope they were very helpful. These are our different accounts that we have, if you're not a member yet. But let's see if Stacy, I don't know if we had any questions that came through the presentation.
No, there was no questions that came through. Great job.
Perfect. Awesome. All right, guys. Well, have a good evening. And once again, thank you for joining us today.